What's up, everybody? Welcome to another episode of the Stock Bros podcast. My name is Tony. Today we are going to talk about over-the-counter exchanges and stocks and penny stocks. But first, please subscribe, leave a comment, let me know what you think. If you have any questions, let me know. So let's get into the topic of discussion. Let's start out with OTC stocks. What are OTC stocks? So OTC means over the counter. This means you will be buying and selling companies not listed on an official stock exchange. Many OTC securities don't qualify to be listed on major exchanges because they don't trade enough shares or their shares don't sell at a minimum price. So many companies need to hit a minimum price target of at least $1 to be listed on the major stock exchanges in the US. I know the NASDAQ has, I think it's $1 minimum that if you fall below $1, you're off the stock exchange. So many stock exchanges have standards that companies have to meet to be listed on the exchanges. This is why these companies go to the OTC markets. So where can you go to buy OTC stocks if you can't get them through your brokerage? A lot of this depends on whether or not your brokerage allows OTC stock trading. So whether or not you can buy OTC securities entirely depends on your broker. Not all brokers allow OTC trades, and they're more risky and they're more volatile. So this is why they don't allow those trades. The two major OTC networks that you can go to, you have the OTC Market Group, which is actually a private company. And then you have the over-the-counter bulletin board, which is also known as the OTCBB. The OTCBB, they have 3 tiers of stocks, depending on the size, the share price, and the amount of financial reporting they disclose. The bottom share is the trade at your own risk. Like you're better off buying a lotto ticket. These are called the pink sheets or the pink market. Now the pink market, these include foreign companies. They could have shell companies, companies that do not disclose any financial information. So these are very risky. What can you buy on an OTC market? You can buy mostly penny stocks. Penny stocks are $5 or less. Any stock that's $5 or less is considered a penny stock. And you have some bonds, you have some derivatives, currencies, mostly foreign currencies or the Forex market. ADRs, those are bank certificates from mostly foreign companies. Those are found on OTC exchanges. Bonds are on there because they trade at really low volumes. Volume is just an indicator of how popular a security is for that day, also meaning how many people are interested in trading that security. So it's good to see higher volumes. It means it's more liquid. You can get out of that investment quicker. Foreign currencies, they're about 5 trillion worth in different nations and money trades that are called Forex. That's an over-the-counter currency exchange. So these are also more risky than going to buy a stock on the New York Stock Exchange or the NASDAQ. Why would a company go the route of OTC market instead of trying to get listed on a major stock exchange? Well, one is they wouldn't be able to get on the stock exchange if they have low trading volume, or they don't meet a minimum share price. The listing fees can be as high as hundreds of thousands of dollars to maintain a listing on the NASDAQ or the New York Stock Exchange. A lot of foreign stocks can't get on the New York Stock Exchanges or the NASDAQ. They may not want to disclose certain financial information. There's also less regulations on OTC securities. So that's something you have to be really careful of if you're going to be buying anything from an OTC market. You have to be cognizant of the fact that there's less financial regulations and there's less restrictions. So you never know. A lot of these companies could be shell companies. There could be some fraud. It's not always the case, but it definitely happens, and that's something you need to watch out for. So pros and cons. I just gave you a couple cons, but let's talk about some of the pros. The OTC upside. Well, lower share prices. So a lot of people, when they're first starting out, they think they need a lot of money to invest. So they go and they're buying penny stocks. This isn't true. I have a video out called Dollar Cost Averaging, How to Invest with Small Amounts of Money. Check that out if you're a beginner. Very important. So some of the other upsides are there's high growth potential, but it's also very risky because you're buying something that's $1 or less. So if it goes up to $2, you double your money. There have been some big name companies too that started out as OTC stocks and then became large market cap stocks. So it definitely happens, but it's very, very rare that that happens. Now we'll talk about the risks. OTC stocks on many brokerages have trading fees. So a lot of brokerages charge $6.99 a trade, $3.99 a trade. That's something you're not going to see with stocks listed on a major stock exchange. So that's something to be aware of. Now, like I said before, there's less regulation. There's higher risk of fraud and criminal activities. OTC markets or exchanges are victims of swing traders and pump and dump schemes. So many times these companies pump up the stock and swing traders take advantage of that. And there's a lot of fugazi stuff going on. So you have to be very careful. If a lot of people will see a stock that's 75 cents jump up to $1 and they see it going up and they try to get in on that and try to catch the wave of the momentum. But experienced swing traders know exactly what's happening and they're following the candle charts and they sell, and then you lose a lot of money if you don't know what you're doing. So you have to be careful. A lot of OTC stocks are just used purely as swing trade stocks or even day traders. So it's something you need to look out for. It's also a very high percentage of them do not succeed. Now, I looked around for the exact numbers. I saw 99%. I saw 95%. I saw a lot of high numbers, but I couldn't verify exactly what the correct information was, so I didn't want to say an exact number. But I have seen as high as 99% of OTC stocks fail and go bankrupt and never actually make it to a major stock exchange. Now, because I pride myself at fact checking and having multiple sources before I do these videos, and I want to have as good a data as possible and as factual as possible, I don't know the exact number, so I can't tell you if that's true or not. But from the few sources that I looked at, it seems like there's a very high failure rate, and I could definitely see why that is. So there's a lot of risk reward to weigh when you're buying OTC stocks, and you definitely need to do your research. That would be my best advice that I can give someone before you partake in any buying in OTC exchanges. Do your research, do your due diligence. And just because you're starting out and you're a new investor and you don't have a lot of money to invest, you don't need a lot of money to buy high quality stocks. I'd rather have one share of Apple than 100 shares of some random OTC stock. So it's quality over quantity, everybody. Quality over quantity. And you can definitely get started with as little as $5. If you start out with Acorns, you can use my link below in the video description. Acorns is a robo-investor. They have pre-made portfolios made with high-quality diversified ETFs, and they invest your money for you. And they do a roundup feature where you link your bank account to it, and anytime you buy something, it rounds up the purchase to the nearest dollar and invests it into the stock market for you. And they use a lot of high-quality ETFs like Vanguard. They use iShares, BlackRock. So they're very well diversified, very reputable. And also I have a link for public for you as well. If you want to, you could start buying ETFs and stocks for as little as $1. You don't need to buy some obscure OTC stock. You can buy a high quality stock for as little as $1 a time, and you can dollar cost average. Like I said, if you don't know what dollar cost averaging is, go check out my video on dollar cost averaging. So I think that's it for today. Please don't forget to subscribe, and I appreciate the support. And until next time, thank you.